All right, traders, back again. I want to take time to update you on the USD Swiss franc trade that I was in, and I'm no longer in the trade because I got stopped out for a loss of 45 pips. But traders, I want to show you my trades, good or bad. So I don't want to act like I'm a perfect trader, and I don't want to act like the Ichimoku system is a perfect system either because it's not and I'm not. So I want to show you the reasons why maybe we lost out on this trade and some things that you may want to look for. Now, one thing that I need to start realizing and doing more of is worrying about the 4 hour time frame, because really when you're trading, you should trade four times the you should look at four times the time frame that you're trading. So if you're trading hourly, you want to look at the 4 hour. If you're trading the 15 minute, you want to look at the hourly. You know, the 30 minute, you want to look at 2 hours, and the 5 minute, you want to look at the 30 minute time frame. Okay, so that's how you would really look at your time frame, taking uh, double time frame analysis. Okay, that'd be multiple time frame analysis that you look at to see where you want to base your trades off of. Now I look at the daily, and I got my sentiment, and my market sentiment is bearish. Prices below the cloud and everything. So we went over that and talked about that and the trade and why we got in. Okay, but now you say, oh, don't go against that daily trend. But let me show you one thing: is like this trend down is roughly 788 pips, but this move up, this retrace is like 300, 400 pips here, 397, 400 pips. So that's times that you're losing out, but you're looking at from an hourly to a daily, which is way far ahead. So, it's going to be totally different. So, you want to look four times. So, what I failed to do really is look at my 4 hour chart. Okay, and so I want to be more in line with the 4 hour chart because it's a little closer to what's going to happen with my time, my time and my hourly time frame. But now looking at this chart, there's a few things that I failed to notice because I didn't look at this chart. And if I did look at this chart, maybe I don't get into the trade. One big thing that stands out is, first of all, price is above the cloud. So that sentiment says that we're now bullish. Okay, so it's changing over. My TK cross right now, I had a TK cross that was bullish, but then I had another one here that was bearish, but that's because of this price action here, those three candles. But my Kumo future was bullish. Okay, and then there's a couple things on this chart that you would really look at. First of all, you see this long wick candle, and then you're going to enter a trade after that long wick candle to go short. It wouldn't be a wise idea. Okay, so I didn't make a good decision there because I didn't even look at that. And then another thing that I see is this. Here's a candle broke above the 100 bar moving average, but then you had this candle here, and then you had another candle here. Everything's riding on this 100 bar moving average. Nothing's closing below it. Okay, from 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 17 18 19 20 21 candles are riding along this 100 bar moving average almost. Okay, see all the times it hit it and then bounced off and went back up. So that would have been something to look at. It hasn't broken below that 100 bar moving average. Okay, so you would really want to wait till it does before you get into a trade, for it to close below it, because it's showing you that it's not right now. It's holding that as a good support level. Okay, so now that would have stopped me from getting in that trade on the hourly time frame. Okay, and see, that's something that maybe I should look at more of, is look at the 4 hour time frame, because I do know that I'm supposed to be looking 4 hours four times in advance of my time frame. So that's something that might have got me stopped out and might have helped me to lose that trade there. So let's go back to the hourly. Okay, so now I got stopped out right here. Okay, and I put my stop loss at the key June. I could have put my stop loss up here at the Kumo or above this Kumo, but it was too much of a price for me to let go that high. So what I did, I put my stop loss above the Kijun, and that's the area that you really want to put it, a little bit above the Kijun. But when I saw this candle close above the Kijun, that was my sign to be out of the trade. I lost 45 pips on this. Now what looks like's happening here is, let's put the Fibonacci's in here and see where this market may be doing. Okay, if we're pushing up, we're up against the 61.8 retracement level, and now we got a long wick candle so far, but we got almost 20 minutes before this candle closes, so we don't know what it's going to do. We'll have to wait and see. And then now what I will do probably is look at go back to the 4-hour time frame, and I want to see the candle close below that 100 bar moving average really before I really make any kind of decision, because that 100 bar moving average is holding as support for the market there. And I believe that 100 bar moving average is what down here a little bit. I'll put a line in there and see where it is. Let's see where it is right now. Okay, so we put this line in here, and then we'll go back to the hourly. Okay, so here's that. We want to close below this level here. That's that 100 bar moving average. We want something to close below that, because see, if you try to get back in this trade off of this Kijun, we'll close out these Fibonacci's. Now these, you could get in off of the Kijun, because see, you still have your crossover, everything's there, everything's still intact. Your Chiku span is below price, but if you got in off of that, here's what could happen to you. You get in here, say one of your candles close right here. This candle closes right here, so you decide to get in off of the Kijun, break. So you get in on the Kijun break, and then price moves to here. Okay, so then you're gonna have to say, well, if you do get in right there, you can only get about 15 pips maybe if price stops there and goes back again. So you want price to get below here and close, because see, a good thing here is this level right here is the 100 bar moving average, and this 200 on the hourly. This is the 100 bar moving average on the 4-hour. So you want to wait for price to close down here again. But you really want to see a 4-hour candle close below here. Okay, so that's just a couple things that you got to look at. I should have been looking more at 4-hour time frame distance, 4 times the time frame I'm trading. I didn't do that, and I got beat. Okay, so traders, I'm not perfect. The system's not perfect, but you just got to follow the rules. The system works more than it doesn't if you follow the rules, and you want to keep your losses small and let your winners run. That's the main way to be a successful trader. Okay, any system you trade, it's going to be the same thing. Keep your losses small and try to let your winners run. Patience. You got to be patient and follow the rules. And that's all I did. I followed the rules. I'm patient, and maybe there's more things I can do a little bit different to make sure I have everything covered. But you're never going to be perfect, and you're never going to have perfect trades all the time. So you just have to do your analysis, and if you're confident in your analysis and what you've been doing, you just go with it. And I'm pretty confident in what I've been doing, because I've been profitable. So I'm just going to keep doing what I'm doing, and I want to keep showing other traders how to trade, and let you see why maybe this trade didn't work, and let you see why some do. This one didn't work, and I wanted to let you see why. So there we go, traders. That's it. I'm gone. Until next time, God bless.